Hey, what's going on, everyone? We've got a very interesting situation here on gold that I'm looking at. Posted this on TradingView, and it's just an idea, but let's take a look at our current situation here in gold. Whenever you've got this sideways movement here, okay, we've got this real sideways pattern going on here. Here's the top of the swing. Here's the bottom of the swing. And I'm looking at the 4-hour chart. This is the 4-hour chart. All right. So when you're in this type of situation, your momentum-based strategy goes out the window, right? It throws a real monkey wrench into any type of momentum-based strategy. So this 4-hour sideways movement here, top of the curve, bottom of the curve. The curve is just another word for market edge, right? So here's the top part of the market edge, the bottom part of the market edge. And so far, all of this is just in between, right? It's just in between. So by the time it makes a move to the downside, it works itself all the way back up. By the time it makes a move to the upside, it starts working itself right back down. So it really, there's no way to follow something like that on a momentum-based indicator like Trend Cloud. In this situation on gold, broke to the upside, pulls back, finds that support level, and starts moving forward, okay? And it follows the trend, right? This is a trend following technique. Well, in a sideways movement, it doesn't work. So you have to use other methods, and it's actually much simpler. So if you want, you could establish a sideways pattern and simply use this technique. What I'm doing is I'm looking at that high time frame supply zone, and I'm getting in at the ADR level. Okay, so I'm protected here by 2 ADR levels and also what looks like the previous, what is that? The previous day's high, I believe. Let me see here. Let's go out to the 45. Oh, wow. No, that must be a monthly, previous month's low. Okay. So previous month's low all the way down here. My stop loss is here. Okay. Below the wick of the very last drop base rally. All right. And what we're saying here is, well, it likes to come down into this area, make these right higher lows. Here's your low, here's your higher low, and oh, looky here, we've got an ADR level, right? ADR level right at 2031.9. So I'm taking 2 contracts there long, and let's take a look at the rest of the chart here. So we've also got the opening range breakout with a really nice, I guess you could call this a drop, base drop, right? Drop, base drop. So if we pull back into here, yes, we can make another move down into this area. However, right, the dilemma here is that we are inside of the demand zone that we drew on that 4-hour chart. So it is coming into the general area here. This is simply, there's no real science to this. We can draw it like that. We can take the body of this candle here because that's where value is, okay? The body of the pivot candle, we'll put it on that. But we've already ripped through previous day's low, previous week's open, previous week's low. We've ripped through all of that. So the fact that this is going to go down even more, it's pretty good. So there we are, almost there at that average daily range. So we'll see what happens. And the potential to hold on to this, okay, if we leave our stop there and we head all the way back up to here, at least the very first ADR level, it's around $500. Hey, Krishnan, good morning. Good to see you. So we're looking at around, $164 risk and about a $500 win. So there's a lot of asymmetrical leverage here, right? If we go back to the supply zone, it's about $300 more, about $830, right? So there's a lot of asymmetrical leverage. There's a lot of potential here. And the reason why we can take that trade is mostly because it's already in a sideways movement. Let's go over to the Australian dollar real quick and see what the deal is with the Australian dollar. Let's recalculate our charts and open up the 4-hour. Okay, so the Australian dollar did that quite a few times, didn't it? It did that quite a few times. And right now it looks like we're heading possibly into another sideways pattern here, right? But we don't know yet. We don't know yet. If we do something like this, and we establish 2 points and 2 points, and now we're like here, now we can start looking to go short up in here and to go long down in here. All right. We can look to establish a pattern like this, right? I'll make that green. And we can start doing the same thing. Yes, it did. It did break structure. That's right. So when we were looking at it back here, right, we established, okay, well, we were like right here. Let's make that gray. And we said, oh, great, it broke to the downside. So what did we all do? We went and started looking for shorts right in here. Remember that? Right in there. Let's make that bigger. Everybody can see. Drop base drop, right? That was the logical thing to do. Oh, very long consolidation, breakthrough structure, pulls back. We're going to start looking for supply zones. We had trend and momentum on our side across multiple time frames. And what did it do? Rips all the way back to the top here, right? And then makes the move. Now, this is definitely the better entry, right? I wish we got in on that. So it just goes to show you that if one supply zone fails, always make sure you look at that top area of the consolidation, because it probably wants to retest. It probably wants to retest, and you'll actually get a bigger move out of it. Right? What did that cost, It's pretty expensive stuff. 380. So you were a 1.9 risk, right? That's a 1.9 risk. You would have to have pulled this maybe up a little and gone down. Okay. So to maintain risk. But what did it do? Now it moved all the way down. That's a huge it's a huge move. That's a huge move. And it's still going, right? This thing is still going. $170 risk and almost $1,200. No, it's more than that, right? Went all the way down. Right? $1,300 on $170 risk. It's pretty amazing. Good morning, Frank. Talking about the Australian dollar here. So now that we know the Australian dollar likes doing that, and apparently gold now, we can start looking for that again, right? We can start looking for that again. Yeah, for sure. Yeah, for sure. So, when do you know you're in a sideways movement? How do you establish it? Well, it's really not very fancy, establish the points, right? Okay. You got 2 points on the bottom, right? 2 points on the top, 2 points on the bottom. This thing is going inside. If you see a couple of days go by and it's inside of this leg, here, let's turn this off so you can see it more clearly. Here's the low, and then it pulls back and does like all this, right? You're just looking for a few days to go by where it stays inside of the leg, right? You just draw a line at the very beginning, top of the leg, and let's say right here, bottom of the leg, right? Here's the first swing. Breaks to the downside, breaks to the upside, right? Clear sign right here and here. Okay. This so now you're getting all this sideways movement here, right? So you would have to wait. You'd have to wait and establish that. You would have to wait and establish that, right? All of this sideways movement. Great. Breaks to the downside. Jump in there. Start taking those entries in that supply zone, right? Rip through that. Oh, okay. It wants to go further. Where's that next area? Right up in here. And you just simply have to take the chance on it. You just simply have to take the chance on it. So sideways movement or rectangles, right? That's pretty much how you trade a rectangle. It's okay. It's okay to get stopped out, right? This was the logical move right here. Right? Right in here. You can even draw it like this. We gave ourselves all this leeway, all this latitude, right? And it broke through. That was really disappointing because this went on for a long time. But, don't get emotional about it. Just look for the next supply zone, right? Psychologically, when you look at this and you get stopped out of this supply zone, you start thinking all the supply zones are going to fail. You have to remember that this one specific supply zone failed. That doesn't mean that this one's going to fail, right? But that's what our brains do. Your brain is designed for protection. Your brain is designed for protecting you from pain. And so this is very painful, right? It's like, oh, it's, especially if you over leveraged yourself. If you were like, oh man, throw 5 contracts in there, let's do this thing, go big. That's going to mess you up even more. And then you're going to look at this one and you're going to go, I already lost a ton of money. I already lost a ton of money on this because I over leveraged myself, right? So it gets up here and boom, the big winner, right? Sideways movement. Sideways movement. Okay, Australian dollar. That's how you want to play it? I'll be ready for you the next time. I'll be ready for you. Just like we're ready for gold, right? What's happening with our gold trade here? Creeping down, right? Creeping down. So what could happen? What if we break to the downside here? We could be in the same situation, right? Look at this drop-based drop. What happens if gold breaks to the downside and we're all saying, oh, great, we're going to look for those supply zones. We're going to look for those supply zones right in here because it broke to the downside. And that means that this is going to be the move. But it doesn't do that. It rips through. It rips through and goes back up to this supply zone. Right? Rips through. You got to wait for the next day. Goes back up to this supply zone. You've got to be ready up here. You got to be ready up here. Krishnan, you can simply set that. That's definitely a set it and forget it type of thing, right? You can definitely set that up. You can't set any targets, right? When you're sleeping, you can't set any. You can only set targets when you get into the trade, right? But you can definitely set this up. Right, so you definitely want to have your, if we come down in here and we hit that ADR level and start moving back up, we can take off something here, yeah, right? We can take off something here and scale out of the position. But something like this, you really can set it and forget it. Like, what would this cost up in here? Yeah. It's very doable, right? There you go. And then if you turn on your ADR, at least today, we know that there are ADR levels up in here. There, so when that day comes, you might see an ADR level up in there, right? Like here. Whoop. On the lower chart. Here's your ADR1, ADR2, so you let's say this was it. You'd only be able to take one. Yeah. If you wanted to be protected by every single ADR level, well, there you go. $143. There's your first ADR level. Hits. Maybe it spikes up a little bit, hits that previous week's high, and then falls. There you go. take it all the way back down. Now, again, with this situation, just like on that Australian dollar that we learned, this is the better move, right? This is the better move to get in on if we break to the downside. We break to the downside on gold and it rips all the way back up to here. You know, we break through this supply zone and starts moving back up to here. Don't be thinking long. Be thinking, oh, okay, let's hit that short again, right? Because these are the two, those are going to be the two supply zones. So let's keep that red because that hasn't happened yet. And that's what we'd be looking for. So it would be the same plan. It would be the same plan. Well, we can even leave that. We can leave that alone just the way it is. Set it and forget it. And, you know, looking at this, it's like, oh, okay, well, if we come down here and we hit this, look what would happen here. We would come down here. Let's leave this. Let's set this and forget it. Let's set this and forget it. What is this garbage here? Who is this idiot? John, who the hell are you? Get the hell out of my room, asshole. Who is this jackass? John McCory. Pray for my ministry. Get out of here. Blocked. Delete his comment. You believe this? He tried that the last. I don't know how he got into my room. He got onto my Facebook page or something. Pray for my ministry. Fuck off, asshole. Hate these people. Scammers. Don't mess with a New Yorker in the morning, all right? So that we could actually leave, and what would happen here? Comes down, we hit our buy entry, goes all the way back up to here, hits our target, $808, automatically gets in short, stop losses here, all the way back down for another $400, right? So we could actually leave this alone and just let it work itself out. Let it work itself out. Let's do that. Let's keep it all on there. Now, these targets, we can leave that. We can leave that. This is all in, all out. All in, all out, set it and forget it. That's the beauty of, you know, finding these rectangles. And Peter Brandt talks about that a lot. Peter Brandt actually, I believe he really focuses on rectangles and only trades rectangles. So it might be a good strategy for that Australian dollar, Christian. You know, because it's predictable. It's predictable, you know. So you've got this sideways movement. Establish the sideways movement. Okay, I'll do a video on this today, but establish that sideways movement and then set it and forget it, just like this, because we've had several examples of it. Australian dollar and now in gold. Whether or not it's going to grab your entry, well, that's another story, right? That's another story. But because it's a technique that's not as methodical, right? It's not as methodical as a momentum-based strategy, you know. Trend cloud is pretty methodical, right? It's a lot to look at. So for beginners, this is actually, you know, something like this is actually more more better. It's more simple, right? It's more of a simple strategy to look at, and simple is good. There is nothing wrong with simple. So yeah, so that is the situation. Little bit different now. Take a look at copper. Okay. Copper is already hitting that ADR level. Okay. But the difference is that we're in this, we're in a trend. We're definitely in a downtrend on that 4-hour chart. And we have broken through this structure here. We have broken through this structure here. Okay, and we do see structure to the left here. Let's draw some lines here. All right, in there and here. All right, let's see where we broke through. All right, so we broke through. So it's coming into, we are actually in, right? We're in a high time frame demand zone right in there. And the next one is down here. All in the high time frame. So we're hitting an ADR level. We're hitting an ADR level. A second ADR level. I mean, that's pretty extended. That's 125%. That's 125% of ADR. That's a lot. That is pretty extended. So obviously we've got a ton of momentum. Let's go back to that 15. Obviously we've got a ton of momentum to the downside, but we're real low on the curve. We are real low on the curve here. We're not in a sideways movement. So we can't just go from extreme low to extreme high like Australian dollar and gold. This is something totally different. This is downtrend on all 3 time frames. Momentum is down on all 3 time frames, and we're inside of a demand zone. All right, lot of force to the downside. So you know, what do we do here? The move is basically over, right? The move is basically over. So if we were looking at taking this, and let's say the ADR was like down here, the very first ADR level was down here, then I wouldn't have a problem taking the retest. I wouldn't have a problem taking the retest of this trade and then making a move down to that ADR level. I wouldn't have a problem with that. But as of right now, I mean, it's kind of gone as far as it's going to go. I mean, technically, right? We can only trade what we see, right? We can only trade what we see. Market sentiment is to the downside here. So, you know, I mean, can you take a chance on this? Yeah, you can, but you're going to be, there's no asymmetrical leverage is what I'm trying to say. There's just no asymmetrical leverage. Okay. How about silver? Interesting. Okay. Let's go out to that 4-hour chart. All right. So 4-hour chart, we're kind of going sideways, right? And look what's happening here, right? Sideways movement. It did break out to the downside, and I kind of drew two little demand zones here. This first demand zone is pretty much the body of the candles, right? And then this down here is the wick of the candle, of this pivot candle here. Nothing fancy. It's just something I did just for my own self, for visual, right? What's it doing on that 4-hour chart? It's kind of leveling off here, going sideways, breaks a little bit to the downside, returns back up to this area, breaks back down. I mean, it's kind of forming a sideways movement, right? It's forming a sideways movement. Peter Brandt says he wants, I believe, at least 3 weeks of consolidation. He wants at least 3 weeks of consolidation before, using his strategy. And again, I have no idea what the man does because I couldn't follow his program. He's very obscure with his program, unfortunately. All right, silver making a move out of that demand zone. So here we have a downtrend with upward momentum. We're just starting to break through, right? Ripped through the opening range. The context of the high time frame here, the context of the high time frame is what? Right? It's down. Pulling back into the trend cloud. So one of the, right, here's impulse down, correction into the trend cloud, impulse down, right? Logically, that's what we're thinking. So when you're trying to get in on this trade, what are you going to do? Look at this rejection candle here. All of these things go through your mind, It's like, wow, well, what do I do in this situation? Well, you have to wait for the lower time frames to fit the narrative of the high time frame. Maybe this is the story. Maybe that's the story, right? We have to keep considering finding or rejoining this high time frame trend until it fails like this. We have to consider rejoining the high time frame trend until it fails like this and makes that pattern. Once we have this on the high time frame, we can go to work on the lower time frames to go long. Sure thing. Yeah, I will, Krishnan. That would be a good thing to do. Okay. So silver is having a major pullback here. Break into the upside. Heading for that first ADR level. All right, now we got a whole bunch of mixed signals. Downtrend with upward momentum. We just started breaking to the upside. What if we see Okay, and look what we've got here now. Here, right? 15-minute chart. I wouldn't be taking anything in here. I would be looking to get in here. So what if we see something like this? Break of structure right there. Right? Maybe tomorrow. That would add to this scenario that we were breaking to the upside. Okay? That's all you can do, guys. That's all you can do. You can only look for possibilities, right? There's no predicting anything. You just have to look for possibilities and try to capitalize on them. Okay. Doesn't look like anything triggered on gold. And look at that. It just missed. Look at how it just missed our entry. It just missed our entry here. Oh, this is our entry here. Yeah. Didn't come down. Came down into here. We still have time, right? Because what's happening here? But look how it ripped through that opening range. That's a good sign. That's a good sign. Coming up into here. This makes sense, right? Makes sense here to go short. To go short from here back to here. Right at that ADR level. So that still could happen. That still could happen. Remember, we're in a sideways movement. So a lot of our theory goes out the window. A lot of our theory goes out the window. This is a sideways movement. Don't forget that on gold, right? Nice rejection there. So we're hoping for some craziness, right? Breaks down to that demand zone area, hits that ADR level, and then it's off to the races, right? That's what we're hoping for. Copper has already hit that second ADR level. Okay. Major downtrend on every time frame. Very strong momentum to the downside. And we're low on the curve here. So we're actually in a trend. So we can't just use our move where we set it and forget it, right? We can't just place a set it and forget it trade on here. We can't do that because we're actually in a trend. So we're actually using trend and momentum in our setup. And there is no setup here until we pull all the way back to at least this 15-minute demand zone. Right in here. Right there. Okay. And if that doesn't work, maybe it wants to pull back to here. This demand zone right here on the 15-minute chart is also the bottom part of the trend cloud on the 1 hour. Okay, that's the thought process. Silver just bouncing. Right, Just bouncing out of there. Let's see if we can establish a side. Silver likes to go sideways as well. Let's see if we can establish a sideways movement here, right? Get one more point, pulls back down. Once we're in the middle, then we can start taking chances on a sideways move on silver. Platinum, high time frame. We don't have anything, right? I don't think there's really, that's pretty far back. That's pretty far back. We broke through structure here on platinum, and we're starting to cycle up. Okay, starting to cycle up. Momentum is up, but the trend is down. In order to make some sort of move, okay, it does look like it's pulling into right. Does look like it's pulling into that area there. So the only thing against us is we are cycling up, but we do have this 15-minute trend. There's one here. Sell. Stop loss. We might make that, right? Now that we're looking at it, downtrend, downtrend. The only thing we have against us is this. We can take a small little risk there. The only thing against us is we're cycling up, right? But we've got momentum. We've got momentum here. And we might have missed it. But we are in a downtrend. That is the previous day's low. ADR checkpoints. ADR checkpoint all the way down here. So we've got some asymmetrical leverage there. We've got some asymmetrical leverage. Right? It might not take it. We might make it. We might not make it. Gold. Unbelievable. But you never know. Sideways move like that, you never know. You never know what's going to go on. Platinum. Let's see if we can make platinum happen. Oh, I can't believe it. Crude oil has been established now. Drop down to the 5-minute chart. Okay, so crude oil already back up to 75 bucks. That was a very, very fast-paced. That happened real quick, didn't it? All right, so we just broke through this demand zone. Turn that gray. We broke through that demand zone. Momentum has shifted. We're above the 50 on the 4-hour. 1 hour chart. Momentum is with us. 5 minute chart, we are extended. So we want to pull back somewhere in here. So what we should do is start looking for, in this particular case, start looking for some zones on that 15-minute chart. ADR is all the way up here. It's just starting to break out to the upside. Okay. Uh-oh. Oh no. What did I do? Oh, that is a signal. M2K. I thought I set up a trade here. Up arrow on the M2K 5 minute. What happened here? Let's see. Up arrow is starting to form. We got a flash of it. Okay. Downtrend, pseudo trend. I don't know what kind of trend that is. Signals to go up. Momentum is still down. Downtrend, pseudo downtrend, right? Bunch of mixed signals. Back to crude oil. Okay. So crude oil is breaking to the upside here. We ripped through that supply zone. Momentum is with us. The trend on the lower time frames is with us. How do we get in on this? Well, we start looking for supply zones. Here's the trend cloud. Okay, so a pullback into the 15-minute trend cloud, possibly. We really want that timing indicator. You know, if you're in a situation like this, you don't really see a clear zone. You have to go out to the 1 hour chart. And what do we have? We've got the 1 hour trend cloud right in here. And we've got this drop base rally on the 1 hour chart. Previous day's high, previous day's close, right? This basing candle is actually inside the bottom part of the trend cloud there. Let's take a look at that on the 15-minute chart, what that looks like. So how about previous day's high by, no, we would be safe with structure, right? We'd be safe with structure right there. Two contracts. Can do a nice setup like that and set that up. Pulls back, hits that demand area for the move up. $74.22. Will it pull back that far? Okay, it is showing the 15-minute because that's the chart we're on. If we drop down to the 5, and this area here, because we are extended, we're expecting this to pull below that 50 simple. So you see how we're putting everything together that we learned? Any time frame that you go to, Any time frame that you go to, if you see an extended trend, you have to start looking for some kind of zone or area underneath that 50 simple. And that is where you want to jump in at. Okay. So there we go. We've got $140 risk, 2 contracts. If this pulls back, we should be able to get in on that because momentum has shifted to the upside, right? Trend is up. Momentum is up. We're breaking above. Now, the only thing that we don't like, right, is this. The pullback on the high time frame would pull back below the 50. We kind of don't like, an ideal situation would be something more like this, right? It breaks a little bit further up and then comes down, doesn't break past the 50 for the move up, right? But nothing's perfect. Nothing is perfect. So I don't like the fact that this is going to pull back deep like this on the high time frame. But on the lower time frames, it's perfectly legit. So you just got to pick one. You just have to pick one. That's it. You don't know what's going to work, what's not going to work. You don't have to, right? You just trade what you see. And this is the most important number on your chart, that risk there, right? You try your best not to go over 1%. 1.5, 1.6%. Okay, but I would really practice nothing over $200. Market talk, huh? Crude oil futures get support from products? What does that mean? How do you decipher what the heck does that mean? Crude futures press higher when Brent above 80 a barrel for the first time this month. Yeah, no kidding. We saw that like 20 minutes ago. The fall in U.S. gasoline stocks has provided further upside momentum to gasoline cracks. ING analyst Warren Patterson and Ewa Matheny. Who the heck are they? I don't know what any of that means. I read charts, man. I don't know what that means. Okay, good. Good for Ewa. Okay, Ewa. I'll have to send them a note. Tell them to use TrendCloud, which is not a bad idea, actually. Let's go back to platinum. Oh, look at that. Platinum's working out pretty nicely. We're not in it, though. Oh, man. Broke above, right into that. It did break all the way through. It did break all the way through this this supply zone. That's the 5-minute and 15-minute. Yeah, it did break through that consolidated area there. Nah, I don't know if I like that anymore. If it does come back, that's really pushing it. We had to have gotten in on it, at that time. Although on the 4-hour, it is still legit. It's still legit on that 4-hour. But if it does come back, it's probably going to go higher, right, guys? It's probably going to go higher inside of this area. So what's the next one above? Next one above, right? It's right in here. Previous day's low. Well, what if we get in on previous day's close? Okay, if it does come back, previous day's close. And where would we drag that stop loss? There's really, that's kind of just right in the middle. There's no structure protecting us, right? I don't like that either. There's no structure there protecting us. 5-minute chart. Even the 5-minute chart, right? It's all up here. That next zone is here. And if it breaks all the way up to here on the 15-minute, we're going to be in some kind of trend reversal. So you see how you have to think this stuff through? Man, that's too bad. That's too bad we just missed that. We just missed that sucker. We'll monitor that and see what happens. We've got our gold trade set up here, don't we? Right? It's hitting that area there, hitting that supply zone. Hopefully we make the move back down into this area, and we can jump in on that. All right, that's about it. Let's go back to Aussie dollar. Aussie dollar, total downtrend, right? Ripping to the downside, very strong trend to the downside on all time frames. Momentum is down, right? Starting to cycle back up. Where's it going to go? Well, we got a nice opportunity right in here, don't we? 15-minute trend cloud right here. Let's sharpen this up. Yeah. Here's your 15-minute trend cloud. Right? How about that? There's your zone right there. Let's just do two contracts. That's pretty legit. Mm. 5-minute. Consolidation. It's really just a consolidation area. We don't know which one's going to work, but we definitely know how to trade what we see. If this fails and it wants to go deeper, we've got a couple of zones here. We've got this right here. This move is still going down, right? So we do have momentum and trend on our side. So any pullback into any kind of supply zone that we see is going to be legit. It's going to be legit anywhere we see it. All right, so we got some trades placed. We got some trades placed, and we'll see which ones work. I will have a video on that for you, and I will monitor this. And that's about it. All right, guys. That's it for today. I will see you tomorrow. Have a good rest of the day. If you placed any of these trades, we can monitor them together and just, see how it works out. Make notes, take notes on what happens. I'm really excited about that gold trade to see how that set it and forget it trade in that sideways market is going to pan out. All right, guys. Good session. I will see everybody tomorrow. Have a good one, everybody.